Let's talk about retirement. It's the thing we all work towards, right? But there's always that one big question hanging over our heads. How in the world do you grow your savings without risking everything you've spent a lifetime building? Well, today, we're going to dive into an investment philosophy that flips the usual advice on its head, one that puts protecting your money first.
I mean, this is the question that can keep you up at night, isn't it? Especially when you see the news and the market is just all over the place. You've worked for decades to build that nest egg. Is it actually safe if the market suddenly takes a nosedive?
For a long time, traditional retirement planning has felt, well, like a pretty big gamble. The conventional wisdom was always to just pour your money into stock-heavy portfolios. And that can feel like you're at a high-stakes casino table, especially the closer you get to the day you actually want to retire.
And that, right there, is the heart of the problem. A sudden crash can be absolutely devastating, especially if you're about to retire or you're already living off your savings. That nest egg you spent your whole career building is just vulnerable.
But what if there's another way to think about all this? A completely different philosophy that isn't built on chasing risky returns, but on creating a rock-solid foundation of safety. Let's dig into what that actually looks like.
The core idea is almost deceptively simple. If you can't afford to lose money, don't expose it to loss. Think about that for a second. This one principle totally shifts the focus of your investment strategy, away from just potential gains and towards absolute protection as the #1 priority. So if you follow this philosophy, the very first step, the most crucial one, is to protect your principal. Before you even think about growth, the main goal is to make absolutely sure that your initial capital, the money you put in, is never at risk of being lost in the market.
Okay, so how does this philosophy actually work in the real world? Let's start by looking at a conservative strategy. This approach is really designed for anyone who says, you know what, I want total safety and a predictable, guaranteed return on my investment. No surprises.
So, what are the benefits here? Well, they're pretty clear. First, you're completely avoiding stock market risk. That means you get guaranteed returns. And what that gives you is predictability and consistency, which, let's be honest, is invaluable when you're planning for retirement. It's all about peace of mind. So how does this work? It's not magic. It's typically done by using investment vehicles like fixed annuities or bonds. With these, an insurance company or the government basically guarantees you a specific interest rate for a set amount of time. The whole game is about finding the most competitive, secure rates to make sure your money grows safely and steadily.
Now, maybe you're thinking, okay, that safety sounds great, but I'd still like a little more growth potential. Well, there's another path for that. We'll call it the moderate strategy. It's designed to let you capture market gains, but, and this is the critical part, with zero downside risk to your principal. This is often done using products like fixed index annuities. And here's the breakdown of how it works. It's pretty neat. Step 1. Your principal, your initial investment, is 100% protected by an insurance company. Step 2. Any growth your money sees is linked to how a market index, like the S&P 500, performs. And step 3. If that index goes up, you get a piece of the gains. But if it goes down, your principal and any gains you've already locked in are completely safe. You lose nothing.
So what this approach really tries to do is give you the best of both worlds. You get the security of knowing your hard-earned money is safe, but you also get the potential for market-linked growth that can help your savings stay ahead of inflation.
So, when you put it all together, what does this actually mean for your retirement? Well, it means you can finally get off that financial roller coaster and stop worrying about every little dip in the market.
And here is the key takeaway, the one thing to remember from all this. Growing your savings for the future does not have to feel like a gamble. By making principal protection your #1 priority, you can find strategies that allow for growth while giving you that crucial safety net for the retirement you've worked so hard for.
So, as you can see, strategies that protect your principal first offer a really compelling alternative to all the high-risk investing we usually hear about. The big question for anyone saving for the future is finding that perfect balance between safety and growth that lets you sleep at night. What does that balance look like for you?